On today's episode of the Cryptoverse, Ripple decides to place 55 billion tokens of theirs into escrow to give investors some certainty. Bitcoin.com launches their own cloud mining contracts if you want to put some of your money into Bitcoin Unlimited. And Poloniex suffers attacks from two angles, causing major delays for customers. Hardware wallets are the only way to truly store your cryptocurrency securely. Ledger provide a range of devices to suit all budgets and preferences. Check out my review of the Ledger Nano S by clicking on the link in the video description below. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I am your host, Chris Coney. Today is the 17th of May, 2017. I've got one announcement for you today. We'll do the market roundup and then we'll get into today's news. I do apologize for the repetition, but I just want to make sure everyone knows about this. I'm going away this Sunday until the 1st of June. So there's going to be some disruption to the publication of the Cryptoverse. Just want to make sure everyone is aware of that. So hold on to your hats and we'll see what I can do in the meantime. And now time for the market roundup, courtesy of coinmarketcap.com. Now today, the elephant in the room, as far as the market goes, is Ripple. No doubt about it. It continues to climb in price. Today it's up 39%, which is pretty significant considering it's a multi-billion-dollar coin. $16 billion market cap actually, to be precise. It's now half the market cap of Bitcoin and double the market cap of Ethereum. That's kind of funny, isn't it? I'm going to talk more about Ripple in the news segment. I've got a segment on Ripple. In any case, a Ripple token is now worth near enough 42 cents each. Bitcoin is bouncing back and forth between $1,700 and $1,900, and it has been doing so for the last 5 days. A nice chunky $1 billion worth of Bitcoin has been traded in the last 24 hours though. That gain on Ripple, by the way, has pushed the total market cap of all coins right up to 61.5 billion. That's another all-time high right there. Litecoin continues to slip a bit more today, down 1.76%. There were a number of people on Reddit, in the Litecoin Reddit, all saying pretty much the same thing, which is that this is a good time to buy Litecoin. If you go to the Litecoin Reddit, you'll be able to read the various details of what's being said there. For the really big movers today, though, we have to go right down to 16th and 17th place. We have here game credits, now up to $2.12 after a 22.65% gain, and Bytecoin up 63% near enough, with a market cap of 131 million. You know, every time I look at Bytecoin, I think about something that, I think this was Tone Vase that said this. He calls Bytecoin one of the scammiest launches ever. But then Tone calls everything a scam, so I don't know what to say about that. I personally have no cause to look into Bytecoin any further than I already have. It's completely underwhelming to me and forgettable. And while it pains me to admit it, I have to give the biggest loser award today to Steam because it's down 10% today, but maintains its position in the top 10 just with 80 cents per coin price and $187 million of market cap. So the first news story today comes directly from Ripple. Actually, shout out to Mike M from the Patrons chat group for Cryptoversity for bringing this to my attention yesterday, and it was so significant I decided to cover it today. You know, a few of the patrons in the chat group there are Ripple investors, and they've done pretty well out of it, so they keep a sharp eye on what Ripple is doing, and that's good for me because it feeds me this kind of info. So, this comes directly from the Ripple blog, so it's coming directly from the horse's mouth. However, they're unlikely to be objective about it, are they? Because it's their own blog, and when they write these blogs, they are doing it in full knowledge that their potential customers may be reading it, right? So bear that in mind. So the Ripple company, they hold 61.86 billion XRP tokens, Now, if there are 100 billion total XRP tokens, then Ripple Labs themselves holds about 62% of the entire supply. So a big concern surrounding Ripple and its price is that Ripple Labs could suddenly choose to dump or sell 60 billion coins one day and crash the price, which would be bad for investors. So in order to dial down this fear, they've announced that by the end of 2017, they will take 55 billion tokens and place them in like a smart contract that will then release the tokens again at the rate of 1 billion tokens per month. That means it will take 54 months for the total supply to become available again. So that's 4.5 years in total. This part is good news because it gives investors in Ripple a greater degree of certainty about the massive load of tokens that Ripple Labs is actually holding. But when they say 1 billion tokens per month will be released, well, released to who? Well, released back to Ripple Labs so they can spend them on developing the network. Now, if they get their 1 billion tokens, but they don't spend them all by the end of the month, the remaining amount gets put back into escrow and it goes to the back of the queue to be released in due course. So it goes to the end of the queue and will be released in the 54th month, if that makes sense. But is this just a distraction from something more fundamental? Have you ever heard the phrase, whoever pays the piper calls the tune? Well, if you go to Ripple's website, their whole marketing message is geared towards the banks and how Ripple can save them money. They even have this little calculator on their homepage where I can enter the number of transactions that my bank processes each year, and then I enter the total value of those transactions, and then Ripple will show me how much money or how much more profit I will make by using Ripple to lower my costs. Now, this appeals directly to the main aspect that interests banks about blockchain technology. They're interested in how they can use it to reduce their costs and make fatter profits. And Ripple probably see this as a massive payday and are therefore using the exact language that they know will appeal to the banks. And it seems to be working. Next news story today comes directly from Bitcoin.com, which is kind of odd considering it's about Bitcoin.com launching their crowd mining contracts. So this has been in the works for a little while now, but it's finally being launched. If you don't have the time, the money, the skills, or the knowledge to set up your own Bitcoin mining operation yourself, then there are any number of industrial mining farms that will happily rent you some of their hardware so you can earn Bitcoin mining rewards without having to touch any of the complexity. So Bitcoin.com are the latest company to launch such a service, which is what this article is announcing. Now, while this article focuses mostly on the benefits of cloud mining as a method, which means you don't have to worry about the specialized hardware, the real motive behind this is revealed in the final paragraph, where they actually mention that, kind of casually, Bitcoin.com's mining operations signal for Bitcoin Unlimited support. Now, given that technologies like segregated witness or bigger blocks, which is supported by Bitcoin Unlimited, since they require the majority of mining power to signal support for them before they can activate, Bitcoin.com are sort of crowdsourcing the funds in order to grow their mining power and therefore get more influence over which way Bitcoin develops. From the point of view of the average Bitcoin user, if they want to see Bitcoin's block size increase, then they can now put their money where their mouth is by investing in a mining contract with Bitcoin.com. This is one of the major trends that I see in the world of blockchain technology, and as we tokenize each element of value, we'll have an increasing number of opportunities to make a clear statement about what we believe by having the option of actually putting money behind our beliefs by investing in any particular project. So the final story today also comes from Bitcoin.com. This one's called Poloniex Suffers Attacks, seeing a 600% in active traders in 2017. So basically, Poloniex has been under stress from two different directions. On the one hand, they have this huge increase in trading activity, a lot of it thanks to Ripple. And on the other hand, they've been under continuous denial of service attacks, where an attacker floods their servers with fake traffic in an attempt to take them offline. And this has been going on for several days. Now, those two things combined are basically overwhelming the server infrastructure that Poloniex has in place, but they're doing their level best to resolve it. You know, the challenge with this kind of a problem is that it can appear in a matter of seconds. You know, the problem can arise instantaneously, but increasing your server capacity takes a lot longer than that. Plus, Poloniex might not want to incur the costs of increasing their server infrastructure permanently, just in case this spike in demand is temporary. You know, they don't want to be left with expensive hosting infrastructure if it's not being used to its fullest capacity. And it's a really difficult balancing act between cost and capacity. From the user's point of view, though, this means that Poloniex has problems like the site is loading slowly, or it doesn't load at all. Some traders are finding that their trades aren't going through. Some are finding that the trades they put on aren't triggering properly, and so on. So this is kind of costing people to lose money in many respects. And that puts further pressure on Poloniex because then they just get a flood of customer service requests, which they could do without. The bottom line, though, is that this is a textbook example of the problems of centralization. With centralization, there's a single point of failure and a single point of attack, and both of them are happening to Poloniex right now. The solution, of course, is to use a decentralized exchange, which is immune to these kinds of problems. However, while there are several attempts out there to create a decentralized exchange, they each have their own drawbacks, you know, or they have elements of centralization that put them at risk of the same kinds of problems. I'm thinking about BitShares as the most obvious decentralized exchange, but unless you are trading assets that are native to the BitShares network, you still have to make deposits to centralized entities. So for now, there's no real solution to this problem. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From just a few dollars a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That is all for today, guys. I'll be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.